moving on, let's get back and to the top news flow of the day. That is the U.S. strikes on Venezuela and the capturing of the president, that is Maduro. And to discuss that in detail and what really it means for the Indian markets as well, we are now joined by Vandana Hari, the founder and CEO of Vandana Insights. Hi Vandana, very good morning. Thank you so much for joining us today. Firstly, let's start by talking about the crude prices and the impact that they have seen following the U.S. strikes on Venezuela. We haven't seen major upswings as far as crude prices are concerned. So what do you have to say about the prices? Do you think the oil market is in a wait and watch mode? And what's the outlook that we should be looking at, especially back home in India? Is there any impact that we could see?
Yes, good morning. So to almost take your questions in reverse, what is the outlook for the political situation? I think that's a good place to start, because right now what Venezuela is staring at is a power vacuum, a political abyss, just a whole lot of confusion as to who is in power, who is running the country, right? So we have gotten some signals from Washington over the weekend, obviously, starting with President Trump saying that the U.S. was going to be running Venezuela, quote unquote, until such time as they can put in place a transition to a new government. And that was followed by Secretary of State Marco Rubio giving some more details, but also walking back some of the comments that Trump had made, suggesting that it's not as simple as the U.S. running Venezuela, but it's going to try and work with the interim government, which is now headed by the Vice President Rodriguez. So what that leads to is in totality is just a situation of huge confusion as to who's running Venezuela, and let alone the timeline for a transition and the process for a transition and so on. So what does this all boil down for the oil market? So again, a bit of confusion, lots of uncertainty, but the few signals that the oil market is working on this morning, as you see perhaps 30 to 40 cents uptick in crude prices, is one that the new leaders, quote unquote, in Caracas, so the vice president and the even including the army chief, have expressed their continued support for Maduro. So that's not very good. Doesn't look like they are ready to work with Washington. And second, Marco Rubio over the weekend in his comments to media said that all the U.S. embargoes and blockades, he used the word quarantine against Venezuelan oil, remain in place. So he says that those will be used by Washington as leverage to ensure that whoever is in Caracas continues to listen to and follow orders from Washington. So that means we could see a continued disruption in Venezuelan crude exports. And we already know that the state-run company PDVSA over the weekend has asked several joint venture partners to reduce output because essentially it has run out of storage. So we're looking at a situation of continued disruption as a base case scenario. And as the worst case scenario, perhaps a complete shutdown of Venezuelan oil production, which will be about 900,000 barrels per day, which is also, again, a very moderately bullish, I would call it, for the market.
All right. Hi, Vandana. Morning. This is Shrishti also joining in. But to the point that you were making, what can really happen to the supply side? Today morning, we also have comments coming in from President Trump where he says that U.S. oil companies want to enter Venezuela badly. If you can give us some sense, what in the medium term this could imply? Because, yes, of course, Venezuela has the largest oil reserves, but as a percentage of their supply in the overall world market, that's very limited. So going ahead, if U.S. companies enter Venezuela market in a big way, what can really happen to the supply side?
Yes, so good points to talk about as well. So I would start with the caveat that it is almost irrelevant in terms of what the oil market is factoring in the short to medium term. Because what Trump is talking about is very, very aspirational. It's very long term. And there's a lots of ifs and buts and question marks on it. Now, as a rhetoric, as a sort of headline point, it's good for him to talk about it. But U.S. oil companies are going to be very, very careful before making any such big commitments. And as Trump mentioned, billions A lot of analysts believe it's going to be hundreds of billions of dollars that will be needed to restore the very, very decrepit, rundown infrastructure, oil infrastructure in Venezuela. So U.S. oil companies will need to see, first and foremost, political stability and some sort of certainty over, well, first of all, they'll need new contracts as well, right? We know that's a long process in itself. And then they'll need to see certainty on, like, what is going to be the fiscal regime that will govern their engagement in the country? What will be the regulatory stability and so on? So we're looking at this process from companies making the decisions all the way to actually tapping the 300 billion barrels of Venezuelan oil reserves, spanning 5, 10, potentially even more than 10 years. And as I mentioned, I will stress again that there's lots of question marks on how, when, and if that will happen.
All right, Vandana, I was just going to ask, that since you have questioned that rebuilding Venezuela's infrastructure will take years, you've already said that it could take about 10 to 11 years if the U.S. Oil majors, they try to enter. But just wanted to understand, now Venezuela is an OPEC Plus member, right? But currently it's exempt from production cuts due to the crisis. So if at all production begins to surge under the U.S. management, will OPEC Plus demand that Venezuela re-enters the quota system in order to prevent any price collapse? And what kind of prices should we look at going forward in 2026?
Yes, excellent question. So to understand that, we need to put in perspective what quantum of a rise we could reasonably expect in Venezuela. So Venezuelan production over the past few weeks, especially through December, has gone down by 400,000 barrels per day. So from like just under 1 million, it's probably pumping 600,000 to 700,000 barrels per day today. So in the immediate term, if the U.S. relaxes all the quarantines, PDVSA is able to get all the diluents it needs to move that heavy viscous crude, we could see it returning to 900,000 barrels per day or 1 million, which is not going to be a game changer at all in OPEC Plus's equation with regards to giving Venezuela a quota. In the medium term, if everything goes well, and I'm stressing the if here, potentially I would say maybe in 2-3 years, Venezuela could return to the last peak of around, let's say, 2 million barrels per day that we saw about 10 years ago in the country. If that happens, yes, I can imagine OPEC Plus will start looking at giving the country a quota. Again, it's very hard to say definitively it will do, because OPEC Plus takes a slightly longer term view. If a country has endured decades of assault, shall we say, from sanctions and whatnot on its oil industry, then OPEC Plus is quite patient in sort of handing back quotas and limits to that country, as we've seen in the case of Libya as well. So again, this decision for OPEC is, again, I would say, at a minimum 2-3 years down the road. And that is if things do work out well for Venezuela.
All right, Vandana, with this, we let you go. So good having you on the channel today. Thank you so much for your time and helping us understand what this would really mean for the oil market and the outlook going ahead.